Hey everybody, Chuck Barone. It's Monday, August the 21st, 2023, and let's get another week of who knows what the heck kind of crazy we're going to be doing this week started. Before I get rolling on the show though, like always, like I do every day, let me welcome everybody and thank you guys as always, really from the bottom of my heart for your guys' support. You guys coming here every day, watching these videos, hanging in there with us. We appreciate you guys. We do. You guys keep us going here. Mucho Garcia. Anyway, let's talk about these markets today. This is going to be kind of an odd week, guys. Ordinarily on Monday, I'm going to talk about all the big data we got coming this week, and I'll do that. It's just that this week seems like it's going to kind of be a quiet data week, setting itself up for Powell, who will dictate what he says, by what he says in his speech. I believe it's going to be on Friday. How these markets do this week. The market is just totally flipping out now by these higher rates, like there's some kind of surprise. We know that the Fed's been raising rates for a long time. We know they took it from basically zero up to close to 5.35%. We know they're probably going to do it again next month in September, getting us to 5.6%. And then it's going to be, will there be another one this year? Now, I believe there's going to be an increase in September. A lot of the market betting against it. Actually, I'm pretty much, I think, in a very small minority that thinks they're going to raise. I just don't see any reason for them to stop right now. The economy is going. The bond market's not liking it, neither is the stock market, but hey, the economy's still going, and I'm going to talk about some data today that I thought was interesting. So let's look at these markets today. Stock market ends mixed, with the Dow falling 36 points, sitting at 34,463. So the Dow, the narrowest measure of the markets, having a small dip today, not really much of an event. The S&P jumps 30 points, so the broader market reacting well, sitting at 4,399, about to get back up over 4,400 on the S&P. The NASDAQ up 206 points today, a little bit of a rally in our tech. 13,497 for the NASDAQ. Okay, so the market's mixed, but all in all, not much of a day. And I really think it's going to be this kind of a weird, quiet week, unless we get some surprise somewhere, which is always possible, and especially in the bond market. So how did the bond market do today? Well, bonds continue to tank. The 10-year jumps 9 basis points, sitting at 4.34%. It's a big number, man. It keeps climbing. The 2-year jumps 7 basis points, now sitting at 5% even, just over actually fractionally. So now you got a 66-point inversion, so narrowing still. The 10-year continuing to climb, showing the bond market believes rates are going to continue to go higher and stay higher. Bond market, usually when people think market rates have hit their peak, people are buying bonds, anticipating cuts and capital gains in those bonds. Obviously not the case yet, right? As the bond market continues to sink with rates on the move. 5% now on the 2-year. I saw a CD the other day, a 6-year CD at over 6%. Wow. So the bond market still having a tailspin, which led to the stock market kind of wondering what in the hell's next. The dollar today down just very small, sitting at 103.34 on the index. The dollar is still the strongest. A lot of rumors and a lot of innuendo about the dollar. But as it stands right now, well, what would you rather own? Other currencies I'm talking, okay? So what other currency would you prefer to the dollar? India? China? Japan? Who? Euro? So I think right now the dollar is still the champ, and really not much happening. The dollar's been kind of sitting there at a little over 103 for a week or so. Metals today are rallying, even despite a strong dollar. Gold up $4.80, sitting at $1,894.30 for an ounce of gold. Silver up 53 cents today. A nice day for silver, sitting at $23.29. So while these metals prices are off their peak, because of this strong dollar and, you know, all the economic crap. Still pretty strong numbers for gold and silver, and I believe they got room still to the upside. Oil, down small today, down 33 cents per barrel. $80.92 for a barrel of West Texas Intermediate. Moving back down, I think we're going to probably see oil get right back into its comfort zone between 70 and 75. This spike looked like it was up over $86. Looked like it could turn into something formidable, and still theoretically could. But it looks like there's no real increasing demand, at least for oil, that, you know, our supplies can't handle. So we'll see the winter coming. We'll see what happens with the war and how things go. We had the big spike last winter. We'll see how it goes this year. Bitcoin today down small, down $105. $26,118 for Bitcoin. I was reading a lot of stuff about it. I guess there's going to be some big doings in this market. Some people feeling very bullish about some of these ETFs, feeling like if it gets there, you could see Bitcoin really jump. Some people feeling like the Fed's about to pull the rug out from under cryptos. So it's just going to be fascinating to watch it play out. I got to admit, I'm kind of glad I don't really have money involved in cryptocurrencies. I'm an old fart, you know, a little too beyond my comprehension. I don't want to invest in something I don't completely understand. But watching these numbers on Bitcoin, it certainly has been holding its own. I'm going by a trader mentality, not any kind of, you know, fundamental analysis here, right? But looks like Bitcoin, if they get that ETF done, could have a move to the upside. All right, so let's talk about this week. It's going to be a quiet week, guys. It's going to really be interesting. Today, really no economic data coming, just earnings coming, and they're trickling out. Tomorrow, we're going to get existing home sales, and those are expected to be down. We'll see about that. I think the only reason existing home sales are down is not because of lack of demand, lack of existing homes on the market for sale. On Wednesday, we'll get the Mortgage Bankers Index, which is expected to be down for both refis and purchase mortgages. We're going to get new home sales, which are expected to be up because of no existing homes for sale. On Thursday, that'll be the day for any kind of real, you know, data coming. We'll get short selling report, short sellers covering their positions like crazy. We'll get durable goods orders. That's going to be an interesting one for manufacturing data. We'll get jobless claims, and that's going to be the data that moves things. They're expecting 242,000. We had 259,000 last week, so they're expecting numbers to come down just a scooch this week. We'll see. Be interesting. And on Friday, we'll get the University of Michigan Consumer Sentiment Survey. That's expected to be flat, not up or down. I doubt that really happens. Stuff like that doesn't tend to come in flat, so I think we'll see it move up or down fractionally. So there it is this week. So really, the big event of the week is Jackson Hole. It's the Fed. It's Powell. St. Jerome going to give his speech this week. We'll see where that leads us. But all eyes on Powell and the Fed. The Jackson Hole Symposium. It's a world economic gathering. I call it world economists scheming, how to keep poor people poor, middle class people getting poorer, and rich people getting richer. Powell's speech is going to come at the end of the week, likely to be a quiet week this week, depending on, but unless there's a surprise, but this data set tells me it's going to be pretty quiet until Powell speaks. So Powell gets the spotlight, and we'll see what he does with it. Analysts are going to be watching this speech, man, wow, looking to parse every single word, looking for any sign of what comes next for the Fed. Now, there's big arguments, I shouldn't say arguments, debate about what's going to happen. Do the Fed, are they done? The market's betting no more increases this year. I'm seeing at least one. Some people even seeing two. So it's going to be interesting to see what Powell exactly has to say. I'm guessing that Powell does what he always kind of tries to do, and talk a little bit out of both sides of his mouth. He's going to try to calm the markets a little bit, especially these bond market. while at the same time trying to keep his options open just in case there's going to be an increase coming next month. I think he'll foreshadow that increase again. The Fed has done a pretty good job so far in this cycle of kind of telegraphing what they're going to do next. There hasn't been a big mystery to what's coming. They've done pretty much what they've said when they said they were going to do it. We already know they mentioned a while ago a target of 5.6. Another quarter point increase gets us there. I think that's what they're still going to do. It's just going to be crazy. Literally the entire financial world, and I mean world, the entire world watching this week to see what happens. Of course, we're going to get the parade of Fed yo-yos out there, sowing the seeds of confusion, talking all these different options and what their opinions are. But it all boils down to one guy. He's going to be the one everyone's watching. So we'll see whether Powell comes out hawkish or dovish. The good news is the speech is going to be early that day on Friday, I believe it is. So we'll be able to get a report on that this week coming on Friday for you guys. Okay, other news, just an interesting little tidbit to talk about before we wrap things up today. Crazy question, guys, but is U.S. manufacturing ready for a big under the radar comeback? It looks like it might be so. Surprising to me. As we know, at the end of World War II, more than 50% of the people in the United States worked in manufacturing, factory jobs. Today, it's about 10%. Most people involved in service industries. But this tide seems to be turning a little bit here, guys. This whole Buy American thing, and let's bring these jobs home. We've been talking about it for decades. Looks like it's finally starting to actually happen. Construction spending on new factories, now this is actual factories, not commercial properties, hit $108 billion in 2022. That's last year. $108 billion on new factories. The highest amount ever recorded since they've been recording this stuff. More than was spent on schools, hospitals, commercial plazas, malls, or any other type of commercial structures. I think that the manufacturers in this country, which own most of the manufacturing outside of this country, let's be honest, these multinationals who offshored all the manufacturing jobs for cheaper places, India, China, Singapore, Pakistan, and all the rest of them, now understanding the weaknesses which were really brought to life during the COVID thing. They saw what happens when supply chains break down. They saw their business models go to hell. And I think that spooked them just enough to start bringing some manufacturing back to here in the United States. You had a lot of uncertainty with China and even Asia, really, because a lot of the countries in Asia are going to side with their big guy up over there. It looks like we could be breaking into a bipolar world with China and the BRICS on one side, U.S., Europe, and the West on the other. So it probably makes sense to be bringing some of this manufacturing home. Not to mention the fact that they're getting a ton of incentives and big tax breaks and cuts from not only the federal government, which is showering them with cash to bring jobs back, but local governments. Look at the deals Tesla, Switch, and a whole bunch of other companies have gotten here in Nevada. And look at the deals they're cutting in Texas and elsewhere. The states are cutting to bring manufacturing and bring jobs to those states. Looks like the worms turn on this manufacturing thing, guys. Over 800,000 new manufacturing jobs in the last year and a half. And they say, according to the research I saw, they're going to fill another 800,000 in the next year. Well, manufacturing, who knows, man? Maybe we're U.S. is going to get back to doing what we should have been doing all along and building stuff in this country again. Let's get past the money spinning and the whole Wall Street idea of what constitutes, a really good environment, a really good base for our economy. This whole idea of a service economy without producing anything was a silly one to begin with. We've tried it. It doesn't seem like it works. Let's bring those jobs back. Let's get manufacturing done here in the U.S. Now it's gonna, it's gonna have a downside. We're gonna pay a little bit more for the stuff that gets manufactured in this country to support, our way of life over here and living wages for people. But in my mind, certainly worth a few extra pennies on some widget that supports jobs here in the U.S. Anyway, guys, that's it for the day. We'll be back tomorrow to bring you guys the news you need. As always, I want to emphasize again how much we appreciate your guys' support. If you like what you're hearing, please hit the like button. It changes the algorithms around. It gets our videos in front of more people so we get an opportunity for more views. As always, hit me up in the comments. Be back tomorrow to bring you guys the news you need. Until then, guys, take care.